Hello and happy Monday, everyone. It's Kim Hong here again, sharing another trade idea with you guys. Okay, let's jump in. Pound Aussie, RBA to hold monetary policy unchanged. All right. So the Reserve Bank of Australia will be meeting tomorrow, okay, at 11:30 GMT plus 8 to announce their monetary policy decision. Okay, so it is actually, well, it is expected that the central bank will not be carrying out any changes, okay, will not be making any changes to its monetary policy, all right? So during the previous meeting, okay, they actually carried out a dovish tapering, all right? So quantitative easing was being tapered from 5 billion Australian dollars per week to 4 billion Australian dollars per week, all right? However, all right, the dovish part of it is that they actually extended this round of QE from 2 months to 5 months, all right? So initially planned to end in early November, all right? That's when the re-evaluation of quantitative easing were to be taken place. It has now been extended to February 2022, okay? So yeah, we pretty much know that this current round of quantitative easing will last through at least until February 2022, before the central bank will be carrying out any further evaluation as to whether or not it's appropriate to carry out more tapering, all right, or to hold quantitative easing unchanged at the current rates for an extended period of time. Okay, so with that, yes, we can expect no change from the RBA, okay, in terms of the monetary policy. Now, I think it was back in 14th of September, right, mid-September, that the RBA Governor Low, Governor Low actually said in a speech that he finds it difficult to understand why rate rises are being priced in next year or early 2023. Okay, since the condition for an interest rate hike, okay, which is the actual inflation, to remain sustainably within the 2 to 3% target range, will likely not be met before 2024. So, okay, let me show you guys this this chart over here. So this is actually the speech that he gave, back in September 14, all right? So, well, the main point is definitely on the topic of monetary policy. So if you were to look at this graph over here, cash market rates, which is the Australian interest rate, all right? You can see that this yellow line over here, this upwards sloping yellow line, which is the implied cash rate, all right, is actually the market's expectation, all right, that interest rates in Australia will be raised in 2022 and beyond, all right? So you can see that by the end of 2022 over here, the Australian interest rate is expected to be around 0.25%. And then by the end of 2023, it will be probably like 0.6, maybe 0.6%, all right? So the point here is that the market is actually pricing in, all right? It's actually expecting and pricing in interest rates to be higher than its current level of 0.1%, starting from next year onwards, all right? But Governor Low, all right, Governor Low begs to differ, okay? Let me find it. So I think it's over here, right? These expectations are difficult to reconcile with the picture that I just outlined, and I find it difficult to understand why rate rises are being priced in next year or early 2023, okay? So the thing is that Governor Low has actually mentioned over here that for interest rate to be, okay, for consideration of a hike in interest rate, okay, by the Reserve Bank of Australia, inflation in Australia has to be sustainably within the 2 to 3% target range, all right? And it's not enough for inflation just to be around 2% for a quarter of 2, all right? So what they want is inflation to be sustainably maintained within the 2 to 3% targeted range, okay? And the central bank actually expect this goal to be hit, okay, this 2 to 3% sustainable inflation will be hit no earlier than 2024, all right? Our judgment is that this condition for a lift in the cash rate will not be met, all right, before 2024, okay? Why is that the case? Because he mentioned that, okay, for this condition to be met, will require a tighter labor market than we have now, okay, So basically what they want is wages, okay, need to be growing by at least 3%, okay, but as of the most recent data release, it was only 1.7%, increase of just 1.7%. That is for the private sector, if I'm not wrong, all right? With wages growth slower than this in the public sector, okay? So as you can see from graph 10, this graph over here, okay, this is the 3% mark over here. And we see that at the moment, for the private sector, it's below 2%. And for the public sector, it's way below 2%, all right? So it's not going to be so soon that wages can actually shoot up to the 3%, the central bank's 3% targets, okay? So this is the condition that needs to be met before the central bank, RBA, okay, will consider a rate hike. So with all this taken into consideration, okay, Governor Low just mentions that, I don't know why the market is actually expecting interest rate to be higher than the current level, okay, starting from 2022, okay? Over here, I find it difficult to understand why rate rises are being priced in next year or early 2023, okay? So this is why it is likely that the Australian dollar, okay, this is my personal view, the Australian dollar will be weak for the time being, okay? With the most recent dovish tapering and, right now, RBA Governor Low coming out to clarify the whole thing, like there's no reason for a rate hike in 2022 or 2023, okay? And the central bank doesn't even expect a rate hike before 2024, okay? Knowing that the conditions of inflation, okay, the inflation condition will most likely not be met before 2024, okay? So with that, I'm actually looking at a weaker Australian dollar as compared to pound, okay? So this is my trade idea. This trade idea is based on a H4 time frame, okay? And as you can see, since probably mid last week, okay, pound Aussie has been ranging across. Okay, you can see that this purple region over here is the range of around 120 pips, okay? And obviously there's no clear direction as to how pound Aussie is trading, okay? At the moment, it's just trading across, moving across in consolidation, all right? So because of this, I actually spotted that it can actually, okay, I actually spotted a straddle pattern, I would say, all right? Straddle pattern of 120 pips. So if pound Aussie were to break above or below this straddle, okay, this range, purple range over here, then that may actually present us with buying or selling opportunities, okay? So I have a buy stop level set at 1.876 and a sell stop level set at 1.856, okay? So what could potentially move pound Aussie out of this purple zone? Well, the most immediate event, okay, happening that's going to be taking place will be tomorrow's RBA meeting. Yes, no doubt we are not expecting any changes coming out from the monetary policy meeting, but we still have to focus on what the central bank's forward guidance is, right? I mean, if let's say the RBA, okay, were to highlight that, the recent worsening condition of the COVID situation in Australia, okay, because, well, recently there's been news reporting that COVID virus in Australia has already started to, certain parts of Australia has already started to, infect the other states as well, okay? So as of the containment of the virus, it's not that well done at the moment. All right, it's still they're still fighting against, fighting for the containment of the virus. All right, so with all this, that may actually put the RBA's view, okay, put the RBA into pessimism, okay, of the current economic recovery. All right, so which actually explains why the dovish tapering during the last monetary policy meeting. Okay, so depending on how the Reserve Bank of Australia communicates with the public, okay, in terms of its rate statement, all right, and of course the minutes, which will be released probably 1 or 2 weeks after the meeting, okay, the Australian dollar may actually react, I would say, badly, negatively, again, with respect to the communication that the central bank were to give up. All right. So if let's say the central bank were to sound dovish, were to sound pessimistic, we are likely going to see a strengthening in pound Aussie. Okay. And then if let's say pound Aussie were to break above this purple zone, then of course I'll have a buy. I will buy at the 1.876 level. Okay. So with that, okay, let me go on to the stop loss and profit level setting. Okay, if let's say a buy stop order were to be set, where would my potential stop loss be? Okay, at this level, my potential stop loss will be below, okay, this purple region, which is around 170 pips. Okay, my potential profit will probably be around, slightly below the top of this. Okay, let's say maybe around 180. So close to a 1:1 risk reward ratio. All right, that is if the buy stop order is being triggered. Now, if a sell stop order were to be triggered, then as you guys probably already know, okay, could have guessed, my stop loss would be behind this purple region, which is some 180 pips or so. Okay, and my potential profit, okay, this time around I will have to probably switch to daily chart to have a clearer view. Okay, so this is my entry level. It will probably be below, okay, not below, but above this level. Let me just put a line there, then be clearer. So probably around 220 pips of take profit, which is slightly more than 1:1, all right? Which is slightly more than 1:1. But personally, if you ask me, what is the likelihood that pound Aussie will be moving downwards? I think it's like less likely than it will move upwards. Okay, because like I mentioned, because of the dovish tapering carried out by the central bank, or the Reserve Bank of Australia, and of course the uncertainty caused by COVID cases. Okay, the containment hasn't been going well recently. Okay, and of course remember that the Bank of England, okay, has recently actually, being quite hawkish, okay, leading to the market's expectation that a rate hike may actually be taking place end of this year, okay, maybe in December, maybe in November, all right? So my take is that pound Aussie is slightly going to strengthen rather than weaken post the RBA meeting tomorrow, okay? So with that, I've come to the end of my sharing, okay? If you guys like this trade idea, please give us a thumbs up, all right? And we upload videos on our YouTube channel on a daily basis from Mondays to Fridays, all right? Ranging from items such as trade ideas like this and breaking news updates, okay? So I'll be covering mostly fundamental related news items like the monetary policy meetings, okay? OPEC plus meetings, and probably like the monthly US non-farm payroll jobs report, so on and so forth, okay? And there are other useful resources that you guys can find on our YouTube channel, all right? So please head over to the link at the description below, jintaotai.com, and request for a free link, okay? Because we hold daily webinars, okay, from Mondays to Fridays at 11 GMT plus 8, all right? So it's free, and we have speakers sharing their views on trade ideas, on trade setups, on fundamentals like what I'm doing right now and things like that, okay? So just join us, and I'll see you guys soon. Take care for now. Bye-bye.